Welcome traders to the weekend edition, good through Sunday, January 13th, 2013. My name's Dez and I'll be your host for the next few seconds, and we're going to move fast. Friday, the S&P just a few ticks off from having being at a 5-year high. The S&P broke even for the day. Dow up a fraction, Nasdaq up a fraction, and virtually no movement here on the Russells, but a little bit to the downside. But the banks took the biggest hit. You'll notice that banks were down almost a full percent. Check this out, volatility index down almost a full percent. Look at this fear indicator, the VIX volatility indicator here, which measures the fear in the market at 13.36. That is an extreme low of complacency. Gang, that could spell major trouble coming into the future. But commodities off by quite a bit, you'll see here. Taking a look at first, let's go over here to the S&P daily. Now, something that's of interest to me on the S&P daily, and first on the monthly, is this. We have a resistance here, resistance here, resistance here. So far for the month, we're over that resistance point. Gang, that is really, really bullish for the month. But again, we're only just getting into 1/3 of the month here in January, so a lot of month to go. Here is the weekly chart on the S&P. What is really cool here, we continue higher than this major trend line. We do have a higher high, higher low for the week. Now, if you want to look at this, we also have what's called a hanging man reversal pattern. So if we do, coming up this next week, go lower than this week's low, which means if we get below 1451, then that will be a confirmation reversal pattern, and we should see a lot of downside potential coming into the future. Here's the daily chart. If you look at the daily chart, see these two blue lines. We are in an uptrend, a very aggressive uptrend, almost a 45-degree angle, and we're hanging out at the resistance point. You'll see right now we are at a resistance point. If we do drop going into next week, we will have a tweezer top with a doji, specifically a dragonfly doji reversal pattern. So it is imperative that we stay bullish going into next week. Any sort of bearish activity going into next week could send us down for a number of levels here. Again, 1451 is the chart that we're looking at. Let's take a look at the Nasdaq. Nasdaq, we had this trend line here, resistance, resistance, now acting as support. As long as we stay above it, that is good. Now, if we do start to drop, we'll have a tweezer top. We do have a hammer or hanging man formation here with a tweezer top. So if we go lower, gang, then 3114 in this next week, that could spell a lot of trouble. Now, on the weekly chart, you'll see that we continue above the moving averages on the weekly chart here, and we have made a higher high, higher low, and we do have a line. I'm going to show this line to you. We have support, support, resistance, and right here we're finding that as a support level. A lot of upside potential here if it can just keep going, but once it pops up here, what you're going to see is a lot of resistance points, and that's something we're going to have to watch quite closely here. And then if you look at the monthly chart on the Nasdaq, we've had this nice run. Look at this channel we've been in. Really nice run. We come up here, but now we're consolidating kind of in a wedgie type thing. But the thing that's of interest to me so far is we're above a major trend line. This major trend line goes way back in time. It brings us back here pre-2000. And if we bring this line over, you'll see that we are above that line right now, which is a good sign. The question is, can we stay above it for the month? That's anybody's guess there. Now let's take a look at the VIX while we're here. Now the VIX, this is a daily chart on the VIX. Look how low we are, gang. We just every time we get this low, we tend to rally back higher. That means the markets are diving if this rallies, and we are down here at these very low areas. Check this out. This is a weekly chart. I mean, every time we got down there, we touched it here, and the markets went big time bearish. Touched it here, went bearish. Touched it here, went bearish. We are down in that area again right now. On the monthly chart, look at this. Monthly chart. I mean, we're going way back into 2007, 2006 during the big bull rally that we had, those levels. So if we continue to drop and we stay down there, we could be in a massive bull rally. But the danger, we're not out of the woodwork here, gang. We're not out, I mean, there could be thunder in the distance here now that we are way down here this low. We could get a rally back. That could be quite aggressive. Here's gold. Looking at the monthly chart, have kind of a pennant formation going sideways, but check this out. On the monthly chart, we have a bull pullback taking place. If I do a Fibonacci retracement here, if I draw this, you'll see that we're finding support at the 50% Fibonacci retracement. Gang, this could be really bullish, and this thing could go bullish. We do have some resistant trend lines here that we'll deal with, but this is a really nice setup. Be watching that. On the weekly chart, you'll see we're building a low base, but I do like the gap down run up, and we are finding support at the 100-day moving average, finding resistance at the 50-day moving average on the weekly chart. So we have a lot of upside resistance, but here's the thing. We do have this big triangle. We left the triangle to the downside, but we're not dropping too fast here. If we immediately heal itself, come back into this big symmetrical triangle, this could be a rally of rallies for the gold market. You're hearing it right here. On the daily chart, a lot of choppiness taking place, but we do have a double bottom. See this double bottom? If we can break this trend line coming lower, this would be really good for the market. So if we can pop that line, we'll have another line to deal with, but we should go back into these higher levels here. So be watching gold. Silver, a lot of you guys like to trade silver. A couple lines. This is just chopping around down here. Moving average is starting to catch up with it, but we're on the lower side of the moving averages on the daily. On the weekly chart, we have a nice bull flag. Now, this is what I want to share with you on the weekly. The weekly, if you'll notice here, big bull flag. And go to the charge school there at the website, freeonlinetradingeducation.com, and look at bull flag, and you'll see what I'm talking about. But this could get really bullish and fast. I do want to double check to make sure Fibonacci retracement is above 61.8, and it's right there, finding a lot of support at that 61. That is perfect, gang. Be looking for opportunities to buy silver if we especially get a pop. We have a nice bull pullback on the monthly chart. Silver could get bullish and fast. Be watching that, gang. Now let's take a look at Google. This is a monthly chart. We're coming up to a lot of resistance. So Google at a resistance point had a nice little run here. It could continue to go higher, but a lot of resistance coming up. On the daily chart, we've had a nice run. If you'll notice, we're in this channel, but we're having a hard time reaching the resistance point that's showing relative weakness. That relative weakness is no good for Google, and I could see profit taking come in. I could start to see this drift lower, so tighten up your stop losses on that. Take a look at Apple on the daily chart. You'll see where, look at my red lines here. This is called a rolling over effect, which is nice. We have this lower swing low here with this red line, but then we flatten out. We get this double bottom. So it's a flattened out red line, and then we have a trend line that goes higher here. You can see this higher swing lows in the making at least, right? So with that, we have this rolling over effect. This rounding bottom is what this is. And what's interesting here on Apple, because we have this rounding bottom, is we have this big time falling wedge, which is highly bullish in the market. So it's something to be watching for. And during this consolidation, volume is kind of drying up. What I am looking for here is if we can start breaking out over these levels. If we can break out over 530, for example, that would be pretty aggressive. We could get up over that area. Or you could enter now with a stop loss, say, let's see, stop loss around 528 or lower, to get out of it if it doesn't hold. But this thing has a lot of upside potential. But let's take a look at the weekly chart and see if it concurs. If you look at my gray lines, you'll see that we're in a falling wedge, and this thing could break out. But we do have a big time resistance area with this trend line where we have support here, could act as resistance. So even on an entry on that 550 area could be an area of resistance. On the what you do see on the monthly chart is a nice little bull pullback to the rising 20-day moving average. A lot of reward to risk ratio here. Really good play here, especially with the volume so low so far on the month. So a lot of opportunity on Apple. Now Facebook, which just kills me because I wish I was in. I was telling everybody down here at 15 or 19 and $20 buying opportunity, and it's at 31 change right now. But if you're holding this, you want to be looking to get out around 33. Big resistance coming up on the weekly chart. On the daily chart, this is very extended. But check this out. You remember me talking about this. We had this step up, and this was a great buying opportunity. We had this pullback, and then we have this symmetrical triangle. The entry would have been there. Boom, on the breakout comes up. Big bearish flag, or bullish flag rather, that's even pinching, falling wedge at the same time. Boom, another pop. But we got resistance coming up. Be looking to unload that. The average trader that we have that comes in is between the ages of 35 to 55 there, and they are about 85% male, 15% female, and we have those individuals that are middle to upper management, college educated, usually those that have a propensity of being engineer types. A lot of them are pilots, a lot of them are lefties. My question to you is, are you an engineer? Are you a lefty? Do you have your pilot license? If you're a female, are you at the top? Are you at the top of the food chain at the place where you work, or are you a business owner? Usually that is the case. Anyway, we have a mentorship coming up next weekend as the kickoff, and you have a mentor for life, and you're part of the group with ongoing education that you get each and every month free of charge. It's not a one-time thing. You're a part of a group, and you will be educated from this point forward. We will be getting started. All you have to do is click on the mentorship tab, fill out the form, have a little chat with Carolina for her to answer your questions and for you to answer her questions. We'll find out if we have a match. Take care and follow the rules that we're getting ready to share with you here.
This may not be you, but traders who come to Grok Trade for help are sharp, well-educated, and have made money in the past. However, they weren't executing consistently nor disciplined in managing risk. They bought high and sold low. They let small losses turn into large losses. They kept losing money. This does not have to be you. They made a change before it was too late. Grok Trade students trade within the live markets with confidence. Get signed up today before it's too late for your trading.